Hello, welcome to the European Open briefing for Thursday, March the 23rd. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be taking a look at the latest developments in the currency markets today. So it's another quiet start to the day, though. The dollar remains pretty much in focus. It slid to multi-week lows yesterday. It's seen a very modest rebound this morning. As much of the focus is on the healthcare bill vote in Congress later today, as this is seen as a major test on whether or not the Trump administration has enough support in the House of Representatives as well as in the Senate to pass through major legislation. The pound, though, continues to do rather well. It hit another fresh one-month high earlier today, about $1.25. There's been little reaction so far in the currency markets, at least, to that terrorist incident yesterday outside the Houses of Parliament in London. The euro is also benefiting from the weaker dollar, plus, of course, the improving opinion polls for Emmanuel Macron in the French presidential race. The euro is trading just below $1.08 at the moment. And in Asia, we had the Reserve Bank of New Zealand's policy meeting, and they kept rates at 1.75% as expected, and that saw very little reaction in the currency markets in terms of the New Zealand dollar. But let's move on now to the dollar-yen pair. We can see it's been sliding downwards since the start of the week, currently trading just above 111 level. Yesterday it briefly fell to 110.73. That was a 4-week low. The dollar index is also struggling. It's just a little bit firmer this morning after hitting 7-week lows. And the main reason why we're seeing this downside momentum on the dollar is, apart from the less hawkish Fed following the FOMC meeting, there's also doubts about whether or not President Trump will be able to deliver his promises on fiscal stimulus, which is likely to take the form of tax cuts and infrastructure spending. And the first key test on the Trump administration's ability to pass through major legislation will come later today, where they will vote on the healthcare reform bill, where Republicans are trying to repeal the Obamacare. If this fails to pass through, it would probably lead to further declines for the US dollar, as markets would get discouraged by this as to whether or not Trump would be able to pass through the much awaited tax cuts and infrastructure spending later on. And also we have Fed Chair Janet Yellen speaking today. She may, well, it's not clear whether or not she will mention monetary policy, but it will nevertheless be close. It will be watched closely to see whether or not she'll stick to the 3-rate hike outlook that the FOMC projected in mid-March. Moving on now to the pound-dollar pair, we can see the pound has pretty much held near the highs around 1.25. It hit another fresh high early today of 1.2516. There was not much response by investors to that terrorist incident outside Westminster, where 4 people were killed, as this was seen as an isolated case. There's been a lot of support for the British currency in recent days. Apart from the weaker dollar, we've seen slightly more hawkish Bank of England, and also now that markets know when Theresa May will trigger Article 50, that's removed at least one layer of uncertainty for the pound, or at least for the outlook. Moving on now to the euro. The euro, we can see yesterday it touched 1.08 level several times. It hit high 1.0824. That was the highest since early February. And of course, this comes after that TV debate on Monday, where the centrist candidate Emmanuel Macron did rather well in the TV debate for the French presidential elections. And markets are becoming increasingly optimistic that he will be able to defeat the far-right Marine Le Pen, leader of the National Front Party. Also, let's not forget that the ECB is also sounding a little bit less dovish as well, so that's also providing some additional support to the single currency. In Asian currencies now, both the Australian and Kiwi are, well, you could say that they have been struggling in recent days, mainly due to weaker commodity prices, particularly metals such as iron ore, which is impacting the Australian dollar, as Australia is a major exporter of those commodities. The Aussie is currently down around 0.5% against the US dollar at 0.7634. The Kiwi is a little bit more resilient. We had the RBNZ policy meeting earlier today. Where they were mainly neutral. They said monetary policy will remain accommodative for a considerable period of time, but there was a little bit of surprise that the central bank wasn't too concerned about the weaker than expected growth in the fourth quarter of 2016, suggesting that even though rates are unlikely to go up, they're not likely to be cut either, and that's reflected in the Kiwi, which is mostly flat on the day at around 0.7044. In commodities, the oil, it actually fell yesterday after there was another bigger than expected build in US crude inventories. They rose by 4.95 million last week versus expectations of 2.80 million. But given that oil prices had been drifting lower for some time now, we saw a bit of a technical rebound. US crude is currently trading around $48.20 a barrel. So even though it looks like that was pretty much already priced in by the markets, and maybe it's a sign that there's a limit to how much further oil prices will fall. In gold, the fact that the dollar has stabilized a little bit this morning, that's pushed gold below yesterday's 3-week highs when it hit $1,251 an ounce. But overall, since we still have a bit of a risk of sentiment, it's holding near those 3-week highs. Looking at today's economic calendar, the main focus will be on retail sales numbers out of the UK. In the US, we've got the weekly jobless claims and new home sales, and we're going to have the flash release of the consumer confidence index out of the Eurozone, and of course Janet Yellen's speech at 12:45 GMT, where she may make some remarks on rate increases. That's it from me. Thank you very much for watching, and have a great day.